Welcome to Courageous Conversation with Teresa W. Gamble, powered by Concierge Resource Professional Consulting. Courageous Conversation is a diversity, equality, exclusive initiative, is a gracious space for a meaningful discussion about culture, life, business, work, learn, live, worship, and play.
Greetings and welcome, everybody. This is your host, Teresa W. Gamble. We coming back to you with our Family Matters series about those important questions that we need to really take in consideration and be more proactive. On our last series, we talked about, do our children know what to do if we was to die, if the matriarch or the patriarch dies tomorrow? And Tina Noble took an amazing deep dive and tell us some things that we needed to do, some thought-provoking questions that we need to take in consideration, some call to actions that we need to do that we have not done, and stop procrastinating and being more proactive, because we're still in the pandemic. And they just announced recently that they got a new strand called BA.5 along with the monkeypox. So we still have to take in consideration that life is very precious, and we not do not need to take it for granted. So we need to get our house in order, get our business in order, get our records in order, so our children is not fumbling trying to figure out what to do, who to call, what's the next step to take. Will they still have insurance after you die? Can they get access to the bank account? Can they get online to the online account to transfer and move money? Or better yet, even your social media accounts. Have you set up a legacy person to have access to your social media accounts? So it is so much we need to take in consideration that we don't, because we don't make the time to do it. So me and Tina Noble is sitting down having a conversation for you to take the time to do that, even if it's gathering the family and y'all do it together as a team. So welcome back, Miss Tina Noble, and we are diving into what is going on next about who do I protect on my insurance policy. Welcome, Miss Tina.
Thank you. Thank you. Welcome. Thanks for having me back. I love this. I love talking to people, and I just love just making sure people know what to do, right? So diving right into it. Who do we protect on our life insurance policies, right? So if you are at a job and they're offering you the advantage of having a life insurance policy through them, then some jobs will actually pay for that employee's policy. But if we want to include our spouse or our children, then we kind of pay a little bit extra, right, outside of our check. So that's when I suggest that we definitely take advantage of, if it's not costing you an arm and a leg, then take advantage of those the employer policies as well. So insure yourself, but if you can get your family, your husband and your children, insure them as well. But no matter what you do at the job, you always want to get your own game plan in place outside of the job, because depending on the job, you don't know if that policy is going to actually take care of expenses if it does not happen on the job. And different companies can have their different rules. So when you're doing your own game plan in place, that means you're getting a policy inactive, getting it in place outside of the job. You want to insure yourself. You want to insure your significant other, whether it's a husband or a fiance or something of the matter. You also want to make sure that your children are insured on there, right? For some companies, you have to pay additional for each individual child to be on there. But if you come over here to where I am, then we can insure one child rider insures up to 10 children and grandchildren. And that includes, adoptive children as well. Now, if you are the caregiver for a sibling, then you should be able to add your sibling or get a policy for your sibling as well. You can put, if they're over the age of 18, you can put that policy in their name. And if you want to be the one taking care of the payments for it, then by all means, you can do that. And there are even some instances where children are getting policies for their parents. So usually it should be the other way around, but sometimes we children have to maybe make sure that our parents can have policies. Maybe their income doesn't allow them to be able to pay for it. So what the children will do is you will still talk to your insurance agent. That policy would be for that adult, so for the parent or for the adult sibling, but then you would be the payor of the policy. So they're the insured, but you would be the one paying it. So there's different ways that you can do it. And again, talk to your life insurance agent, and they should be able to direct and guide you properly.
That's good, Tina. That's real good. So for those individuals who do not even make a livable wage, they are barely, making ends meet. What strategies can they do to be able to sustain these policies once they get them and don't let them lapse?
First of all, try to get the policies as soon as you possibly can. The younger you are, the healthier you are, the more usually the rates are more in your favor. Okay, so if you can start as early as in your early 20s, then by all means do it, and just make sure that you sustain that policy throughout the term of it. If you get married, then you get a separate one with you and your spouse, but you still have that other one that you've been paying for, because it goes by your age and your health. So if you are someone, because of just the way that the economy is going and you can't sustain it, first of all, whoever is your insurance agent should be able to find you something that is affordable for your pockets. That's the ultimate goal here, right? If you don't have someone that's working, trying to help you find something that's affordable for you in your pockets that you can maintain, then you need to talk to a different insurance agent. There's plenty of them out here, so pick one, but they should be working on your best benefit.
That's good. That's a good thing to know, because I know when my dad was working a lot, and he had an insurance agent that really looked out for him until he wound up retiring, and he got this new agent that increased the monthly premiums of the policy. And he had me to come over because for some reason he was not sure or comfortable with it. So that's where, the adult children need to help the older parents when their traditional agent, for whatever reason, leave the company or retire, to make sure they're not taken advantage of. So that leads into my next question. If a person's income is very limited and tight, and they get a lump sum payment of money, and say it could be stimulus money, it could be a payout for something, of monies that they weren't aware of, would you suggest or recommend them getting the policy and paying the premium up for a whole year until it's tax time again, and they can use their tax refund to renew the policy?
Absolutely. So again, your insurance agent should be able to, they should be your second confidant, right? Your first one is going to be your spouse or your family or whatever, and they should be the next one in line, because depending on your situations, people's lives change daily, yearly, sometimes monthly. So if you can get a policy that's at the very minimum and pay it, but then you do get like an income tax or some kind of lump sum, then yes, go ahead and pay that up for the year. Because guess what? Along that year's time, you can put some money to the side so that when it's time for that to renew in the next year, then you can pay it up a lump sum again. So you don't wait on an income tax or something that you haven't gotten yet. I try not to bank up on money that I don't have in my hands yet. Yeah, we know it's coming, but we also know sometimes when you're expecting lump sums, things happen. Life
Right.
happens, you know, something might come in and throw a monkey wrench in it and you don't get the full amount that you thought, or it just doesn't happen at all. So don't depend on that. But if it happens, definitely try to pay it up quarterly or yearly if you can, if it's not too much. That way, that's a bill you don't have to worry about, right? It's out of your hands for the next year. And then, like I said, slowly but surely, put you a little account to the side and let that be your life insurance account, you know, so that when it's time for that to come back around, then you'll already have that money and you'll be ahead of the game. Now, let me say something. You said something about like when your dad had his policy and he changed agents and it went up. Now, a lot of times what people don't understand, and this is why it's important that when you have a policy that's very reasonably priced, you never want it to lapse or become where it's no longer, policy is no longer standing, it becomes void, right? Is because if it lapses and you have to start over, then they're going to start at your current age based on your current health. And then depending on what type of insurance policy you have, if it's a whole life or some type of cash value, you may have to submit blood work or do a physical to get that policy. And if anything has changed, then that can probably change the standings of whether or not you're able to get that policy or not. With term policies, I know with our company, I'm not familiar with every company's guidelines and rules, but with our company, once you have it, you don't need to necessarily do a physical or blood work to get the policy if it falls below a certain amount. If you're trying to get $1 million policies or $500,000 policies, then yes, they're going to require blood work up front. But once you have that policy and it's been issued to you, you'll never have to do that again. So even if your policy terms out, meaning it comes to the end of its term, then our company automatically will reinsure you. So you don't have to go back through that process again because you've already been a client of ours. So you would just get reinsured. But what's going to change is, because you're at a different age, then that's the factor that's going to come into play, not your health. Not if life happened along the way and you got diabetes or something, or you had a cancer scare or anything like that. But what's going to come into play is your age. Again, our policies, the amount that we pay is based on our age and our health at the time that we get it. So the healthier and the younger you are, usually you don't have to pay as much as if you're 20, 30 years older, right? And even if you're still healthy, it's still going to be a little bit more because you're 20, 30 years older, or life happened along the way and you're not as healthy. So then it's up to the underwriter to then ensure, though, you know, whether or not they're going to approve whatever that comes about. And as long as it's nothing too damaging in your health history and your health records, which brings me to another point, and I'm sorry, but let me say this. We have to be diligent about knowing what's in our health records with our physicians, right? So, because when you're going for a policy, they're going to go into this database that has all of your medical history in it. So when you went to the doctor, what you told them during the times that you filled out the forms, and every time you go, it's been a year, they want to update, they want to know what's been going on and things like that. All of that stuff, plus whatever the doctors write down every time you go to a visit, when you go to the ER, anytime, it all goes into a database. And that central database is what our underwriters and what the companies look at. And depending on what's in there, I mean, we've had people that, you know, were getting denied for something because when they finally looked at their medical records from their doctor's office, they had in there that they were obese and the people weren't obese, right? So they had the doctor correct that. And once it was corrected, or they had them down for, medications that they weren't taking, or maybe they took at one point, but were no longer taking. If you were like pre-diabetic, right? Where they might put you on medicine, but they tell you if you change your health and your diet, that you could come off of that. Well, you have to be diligent in knowing that if you were able to do that, make sure that your doctor's office updates your records to reflect that, so that when you're going and you're trying to apply for life insurance, that's not something that's still a factor when it's no longer a factor in your records. So you just have to be diligent about it. You can't trust them. You have to know what's going on inside and outside of that doctor's office.
That's good. I'm glad you brought that up, because since the pandemic, a lot of medical professionals have instituted patient portals. And on the patient portals, you can actually, make sure you have permissions to see your entire record and see what's being put in your chart. Now, everything I've learned that you won't have access to, but you can request to get access to it. So I'm glad you brought that up, for us to be more due diligent to make sure what we're being treated by is documented, and what we're no longer being treated by is removed off our health record.
Absolutely.
Now, my next question, because it has to deal with the pandemic and all the different diseases, global diseases that we're encountering, along with the traditional health issues. And a lot of people are becoming disabled, especially if they've been diagnosed with COVID and recovered, and they still among the land of the living. Are these individuals with underlying conditions and disabilities, and you just said about the health insurance record is what the underwriters use to determine coverage. What is will they be able to get life insurance coverage for themselves?
So I'm glad you asked that. So now there are a lot of companies out here, life insurance companies out here, that even when people were diligently paying their their premiums, with 9/11, right? And the aftermath of the health conditions that a lot of people that were in that immediate vicinity that were affected by that, a lot of them got dropped by their insurance coverages because of the health conditions that were that came as a result of it. A lot of people that passed away because of the health conditions that were a result of it wound up not getting their claims paid or things like that. And unfortunately, those companies had clauses in the fine print that were able to allow them to be able to stand by their policies, right? And their policies and their decisions that they made, right? Their final decisions. I know our company was one of a few companies that paid on 9/11 claims. Same with COVID. COVID came around and just knocked everybody off their feet, right? There were some policies, some companies that chose not to pay out on COVID claims.
Wow.
Our company, thank God I work for who I work for, and I am with who I am with, because they are one of the good guys, right? They're one of the ones that still paid out. Now, with our company, if you did have COVID, depending on how recent it was, if that's the only condition that you've had and you have no other health conditions, right? Then a lot of times they are actually approving and issuing out policies for some of the people and the applicants that are applying for the coverage. Depending on other underlying conditions, sometimes they may get approved, sometimes they may not. It really just depends on what it is. If it's anything that is dealing with mental health to the point where they are a harm to themselves or could be seen a harm to others, then 9 times out of 10, we may not cover them or approve them, but other companies may. Diabetes. We have people that our company has definitely approved that have diabetes or have underlying, heart conditions. It just really depends, and it's seen and taken on a case by case basis. So it really just depends. And that's something that the underwriter will look into when they're looking at your health records. They're looking at how many medications are you taking? Are you only taking one pill, maybe two pills? Are you older in age where it's seen to where they know that the older you get, the more likely you would develop some of these things? So that's kind of a standard. But if this is something that you've been dealing with since your 20s or your 30s, certain forms of lupus, it just depends. There's like over 100 different forms of lupus, right? So it really depends on which form you have and how debilitating it is. So again, I'm not an underwriter, so I don't make those final decisions. That's what they get paid for. That's their job. And they take it on a case by case basis. You're not lumped in with the whole. They look at you individually.
That's good. That's good. So if does those premiums for life insurances, are they higher when you have all those underlying conditions, or that is also determined by the underwriter?
Now, here's the thing. Sometimes when we quote somebody, we're quoting them on a standard. Okay. So when we give you a quote, you can't take that quote and etch it in stone, because we the agents, we don't look and see what the underwriters are looking at, right? So sometimes there will be cases where I've gotten people that have had different types of underlying conditions that were able to get approved. Now, yes, they got rated at a higher amount, but even then, just to be able to make sure that you can get approved, that's a blessing, right?
Right.
And then what your insurance agent will do is they'll look at what it was that came in, and maybe some adjustments can be done. If there's some wiggle room, they can make some adjustments, maybe not as long of a term, maybe shorten the term, or maybe not as high an amount, maybe lessen the amount. But they can wiggle it around to where if that new quote is outside of your budget, then they can probably have a little wiggle room to bring it back down to what they quoted you, or as close to that as possible, so that it can work with your budget. That's why your insurance agent is going to be your second best friend, because they are there to help you have affordable life insurance put in place, so that you and your family can be protected, and y'all can rest easy knowing that that's already something that's put in place.
That's great. That's great. So my last question for those entrepreneurs, self-employed, and individuals with life insurance, and who should they cover? In the event something happened to them, if for the business, in order for the children or the designated beneficiary to decide to either sell the business, keep the business, just an idea of who they need to cover, because we're going to get into in depth on what small business owners need to do and the type of insurance. But if they had a business, who do they cover?
Okay, so if you have a business, if you have a partner in business, right? Contact us, because what you want to do is, what you want to have in place is, each partner will get a life insurance policy and name the other partner as the beneficiary. That's just on the business side. So what that does is it protects each other. In case something happens to one of the partners, the other partner can still run the business and survive. That's why it's important to have those trusts, those wills, and all that in place. And life insurance is another thing that can go in place of that, and it can be named into the trust and the will. So, and it'll be for the business part of it, so that that can take place. Now, if you're a sole proprietor, get a policy on your business and name a beneficiary as like maybe one of your adult children or somebody that you know and trust. Because then again, if you're a sole proprietor, that means that you're the only one wearing all of the hats within that business. But if something happened to you, there's still, you know, if you have equipment and all kind of other things that's being leased or rented out, or the office space itself, right? Then whoever is the beneficiary and whoever is the administrator of the estate can then put those things into place to pay off the other debts. And then the balance will go to that beneficiary, whoever that may be. So it's different ways that it can be done, but you definitely want to not exclude your business. A lot of us, we might work a full-time job and have our side businesses. Well, if we got hurt today or tomorrow and we became disabled for like 6 months or longer, who's going to take care of that? Who's going to pay for that? So you got to look into that. And that's where the life insurance comes into place on that business side as well.
That's good. Last different entity, and then we who to cover, and then we're gonna conclude this segment. Churches, because we've seen a lot of churches where the leaders and the founders of the ministry, they organizational structure may not always be intact. So for churches, for faith-based leaders, who should they cover under their policy, or do they follow the same guidelines as business owners?
Now, church is a business, right? And it should be run as a business. A lot of times it's not, but it should be seen and run as a structured business as well. So you would definitely have some type of insurance in place for that in case something happened. Now, because I have not written for a church, I know we do write for small businesses. There are some small businesses that our company can cover, and there's some small businesses that our company does not cover. But no matter what, there is a company out there that's, that can cover churches and faith-based businesses. And you would just want to get somebody that's well versed in that knows that and does that. And I don't know if it would be the trustees. I don't know how they would deem it. It probably depends on how that structure is done in that church, if it's done as a corporation, or if it's done as an LLC, or sole proprietor, or something
A
like
nonprofit.
that. A nonprofit. I know us, I don't think we cover nonprofits in our company, but like I said, there's insurance companies out there that write for any and everything that's out here. So you can find one that will write for you. It's just, just do your due diligence and just do your homework. And with technology, it's easy to do that. And then also, if you're a church and faith-based ministry, then talk to other ones, because other ones out there have it. I don't know if they necessarily have to have like E&O, heirs and emissions insurance or something like that, but there are other ones out here. Look at the bigger ones and see who they use, and then contact those companies and see if you're a smaller entity, see if they cover smaller entities, and if they don't, they should be able to lead you to someone that does.
That is amazing. Well, we've been listening to Tina Noble. We're talking about family matters, about who do we need to cover on our policy as an individual, as a grandparent, as a business owner, even to decide for disabled individuals, how they can get coverage, making sure your health insurance records are accurate. Do not leave the healthcare professionals responsible for doing that for you, because a lot of times those conditions and illnesses you may no longer have anymore, and that needs to be removed off your record. Because if you've been struggling trying to get life insurance coverage, that could be the reason why of old medical conditions existing on your health record, according to what Ms. Tina Tina told us. And then making sure the premiums, budget and plan for that. Some of the recreational and fun stuff and pleasure stuff that we're doing, we just probably just need to cut back and eliminate that and put the coverage on ourselves. You know, I know on these cell phones, we make sure we have insurance on these phones if they break, but then you don't have insurance on your life, which
That part.
impacts your legacy and impacts how your children, your family move on. So we need to use better decision-making practices and wisdom and be more proactive. And yes, business owners, you need to make sure that if something happened to you, whether your partner is covered, whether you the solopreneur, solo entrepreneur, make sure that responsible family member get coverage of the business so they can either sell it, continue to run it, or either, you know, to close it out. And that's even a protocol for that. There's companies that help you with that. It's called a business maturity specialist. So these are the things we need to know. In our faith-based organizations, we have to do better because a lot of churches over the years have lost the leaders and the house was not in order. So they didn't know who was taking over the church. They didn't know who was going to continue to pay the salary who worked for the church. So we have to there is a business side of ministry that a lot of people don't want to talk about, but we want to make sure that we're getting the information to you, provoke your thoughts, talk to your trustee members, your board members, your family members. Y'all have those come to Jesus meetings. And if y'all don't know what to say or to forget what to say, just grab this podcast and play it and y'all have a discussion. So thank you so much, Miss Tina, for this particular episode about who to cover on your policy. And ladies and gentlemen, don't forget, this is Family Matters Friday. So every Friday, we're going to be dropping new content for the month of July for some things for you to get your ducks in a row in order. And if Miss Tina, again, if they struggle with this process and still not sure, and they don't have their own dedicated agent to help them through this, how can they reach and contact you if they want to connect with you?
Okay, so I think you're going to actually have a form that they can kind of fill out and it can kind of go to me.
Yes.
But if they want to reach out to me personally, then 773-968-6002 and text Family Matters. And what I'll do is I will contact you back and we can go ahead and get something scheduled and get our discussion and our conversation going.
That is great. And she is right. So in the description of the Every Friday podcast, that form is in there for you to click on, fill out your information. It goes directly to Miss Tina. I do not get it. She gets it. So if you don't want to call her or harass her, then just fill the form out. She will get it. She will call you. So make sure you answer your phone and don't block her. And that way you can get the ball going and budget things like you need to budget. I know it's summertime and we having fun, but this is serious. This is something we need to take into consideration, and school's getting ready to come in. So we got to make sure our children are protected because gun violence is rising in our country and it has not been sustained and stable yet in our country. So this is your host, Teresa W. Gamble, giving it to you on Friday Family Matters series. Hope you keep listening. Make sure you share it and check out the description of this podcast to get the link to contact Miss Tina. Thank you, Miss Tina.
Thank you. I appreciate it. And thank you all your listeners out there.
Awesome.
It's 2022, boo. If you'd like to learn how to build a business that'll create generational wealth for you and your family, if you'd like to gain knowledge in a recession-proof industry, obtain state and federal financial services licenses, and make more money, then text the code COURAGE to 470-531-5770. Again, that's COURAGE, COURAGE, to 470-531-5770. You'll be glad that you did.
You've been listening to Courageous Conversation with Teresa W. Gamble. Courageous Conversation is powered by Concierge Resource Professional Consultant. Be not weary in well-doing. You shall reap if you faint not. Galatians 6:9.